JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 27th of May 2021. So yep, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD Research Page, which you can find here if you go on jfdbank.com and click on the Research tab right there on the top. Yep, it'll take you to our page, which we update on a daily basis. So yep, feel free to check us out here, because I believe you can find something useful here for yourselves, guys. So yeah, check us out on jfdbank.com. Now, jumping into the charts, the first one I want to pick up here is the German index DAX, and yep, it is drifting lower, and basically the idea is kind of working out. So the idea was that we might see a further decline. However, we'll be very careful near that 21-day EMA, which could provide decent support. So as you can see, the index did drift lower. It's currently trading slightly in the red, but nevertheless, there is still hope here for the bulls to jump in, as long as that 21-day EMA continues to provide support. If it starts dropping below the 15,215 territory right here, then yes, we could consider maybe a bit of a larger correction to the downside. Now jumping into Dow Jones Industrial Average, and here the index traded kind of virtually unchanged yesterday, and as you can see, it just kind of remained flat for the day. But on the positive note is the fact that the index managed to remain above that 21-day EMA, and so maybe more buyers could see this as a good opportunity to step in. So that's why that's why for now we will be very careful here, very cautious, and of course, yes, we'll keep an eye on this 34,454 territory. That's the level I'm still keeping an eye on in order to go for further upside. And not only a break that I need to see here is also a nice daily candle staying above that area as well. So looking at the cash index, we're seeing that the price is not far from that hurdle. So in a way, there is a very good chance we could see a nice pop above this today. But the main question, of course, if we do see that pop, can we remain above it? So let's keep an eye on that one. For the downside, if suddenly it starts dropping back below the 21-day EMA here, then, well, I mean, a move lower here could be possible. A larger correction, of course, to the downside could be possible, where we could then aim for certain lower levels. But the most important, of course, will be this upside support line taken from the low, the 30th of October. And then, of course, we'll take it from there. The Dow Jones, we were just talking about Dow Jones, the DXY dollar index. So here you can see that we're still kind of trading below this downside line, and in a way, for now, I would say that we need to kind of wait still. We're just playing the waiting game here, because in order to go for the upside, well, a break of this downside line and a push above the 90.28 zone is needed. For the downside, same game plan also remains. I need to see a drop below the 89.68 territory in order to consider further declines. But not only that, I would need to see the daily candle staying below that hurdle. Because we had these two overshoots here recently, so that's why I would prefer to wait for daily candle to to end below this hurdle, and if we do see something like that, then yes, lower levels could be met, where my next target could be this this 89.23 territory, as I mentioned before. This area is marked by the let me just zoom out here, is marked by the lowest point of April of 2018, guys. And you can see also that in January we also tested that area and then rebounded from it. So let's see if we can reach that area once again. Jumping into gold, gold is today kind of flat, I would say, not doing much, but the same game plan as well remains, the one that I've mentioned previously. And the one that I mentioned previously was that if we get a pop above the 1907 territory, somewhere around here, and we see the daily candle remaining above this area, then yes, higher levels could be met, and we could start aiming for the 1934 territory here, or even above that. But for now, it's of course a lot of you are probably hoping to see maybe a bit of a corrective move here to the downside. However, with that, guys, wait for the drop below the 1890 zone right here, and wait for that daily candle to remain below that area, and then yes, we could consider maybe a further move south here. But again, a further move south would be seen as a temporary correction if the upside line here continues to provide support. So keep that in mind, guys. Now jumping into silver, and silver, yes, is it is kind of trading here between these two lines. So I've mentioned this one this morning, that basically for now we need to wait for a violation of one of those lines, and maybe also just to break through one of these levels here. So here for the upside, for example, the 28.23 zone, that's what I'm looking at, and for the downside, I'm keeping an eye on this 27.21 territory, approximately around here. If we see the price dropping below this hurdle, then at the same time, well, we would also have the break of this upside line and the drop below the 21-day EMA, and potentially more sellers could see this as a good opportunity to step in. Now jumping into Bitcoin Cash here, and yeah, so far, and to be honest, let me get rid of all the lines. Let me kind of start fresh here. So after we found good support near this 468 territory, you can see that the crypto reversed back up, managed to climb above the 200-day EMA, which could be seen as a positive. However, still struggling with the 100-day EMA, and it's currently kind of stuck here below it. So let's put it this way: from the very short-term perspective, if we see a nice pop here above this 792.93 territory, at the same time we could see the rate moving above the 100-day EMA, and potentially more buyers could see this as a good opportunity to step in. However, don't get me wrong, there are some obstacles on the way higher here. For example, this 21-day EMA, this is going to be my target if we do see that pop above the 100-day EMA here, shown as the green line. And then, like I said, yep, my next target will be this 21-day EMA, and then we'll take it from there, guys. For the downside, well, if this one starts dropping somewhere below this little hurdle, the 659 zone, and drops also below the 200-day EMA, then, well, I mean, we could see maybe a bit of a decline here, and maybe a revisit of the 468 territory, or even we could see a further move lower. However, for now, it seems that the downside, well, in the near term, the downside could be slightly off the table. However, again, we cannot really get comfortable with that idea until we get a nice move here above the 793 territory. Now jumping into USDCHF. So this one's quite interesting because we are finally breaking this downside line, and yep, this is kind of painting a bit more positive, a bit of a more positive picture, if I can express myself this way. But it's still, as I've mentioned before to you guys, that for me, the more comfortable level here could come on a break of this 0.9048 territory, marked by the high of the 19th of May. And yep, at the same time, we would already be placed above the 21-day EMA, and potentially more buyers could join in here. That's but I'm not really dragging this one way too much to the upside. I'm only aiming for now. I would only, if we see such a move here, such a break above this area, then I would be only aiming for the 100-day EMA initially, and then the 200-day EMA, just to see how it's going to perform near those areas, especially near the 200-day EMA. But for now, we need to be very careful. First of all, let's get rid of this downside line, no longer needed. But what I'm going to stick to here is still the same level here for the downside. So I need to see a nice good drop below the 0.8954 territory right here, and yes, if we do see that drop below this and we see the daily candle staying below this, then this increases the chances for a further move lower. GBPCAD, very quickly on that one, and GBPCAD is still, we're still waiting for that pop. We're still waiting for that, well, not only a pop, but also a daily candle to remain above the this 1.7123 territory. As you can see, once again today we had that breakout, but can the pair move further north? Well, that's a big question for now. Yes, on the positive note, we're seeing a test and again a violation of that hurdle. Another positive is the fact that we're still trading above the 21-day EMA, which some buyers could see this as a good opportunity to step in. However, we are struggling. There's like lack of confidence among bulls at the moment to kind of push this one further north. So let's see if they can kind of regain that confidence and lift the rate above that hurdle again. If they can, then yes, we will go for that larger correction to the upside. GBPJPY, very quickly on this one, so pushing nicely to the upside, and yep, I mean, we are back above this upside line, and this is exactly what I said to you guys when I was covering JPY yesterday, and I said that, well, wait for that confirmation break. And because yes, we were at that point, we were below this upside line, I said that for the downside I still would need to see a drop below this 153.42 territory, 153.42 territory right here, in order to consider the downside. And also, just to kind of support that idea, a drop below the 21-day EMA could do the trick for more sellers. But instead, you can see this is what happened. We had a nice push higher. So yeah, I mean, at the moment, we would need to be very careful here, very cautious, and if we want to go for some higher levels, well, I would prefer to wait for this daily candle to stay above this area, above this 154.84 zone, just because what I don't want to see here is another false breakout. So let's keep an eye on that one. And finally, EURUSD, just a quick update. So we're basically nowhere. This morning we were around here, and right now we are again around here. So yeah, for now, I mean, we're still stuck above this upside line, which is still could be seen as a positive. However, we have moved away from this key resistance area. Maybe this could be seen as a temporary correction, but again, to be a little bit more on the safe side, I would prefer to wait for that push above the 1.2243 territory right here. If we do get a nice climb above it, then yes, I will aim for some higher levels. But for the downside, I mean, what I need here is to see is a break of this upside line and then a drop below the 1.2161 zone, and then we'll take it from there, guys. So guys, that's it for this session. This was a very quick overview of some of the instruments that we looked at this morning, some new ones, and yep, I hope you found it useful. Guys, thank you very much for watching and listening. I really appreciate your time. So just to let you know that tomorrow there won't be any Traders Espresso nor tea time. We will resume on Monday, guys. So thank you very much for watching and listening, and I'll see you later. Thank you very much, and bye-bye.